The last quarter has been dominated by geopolitical news, talks with North Korea, OPEC discussions on increasing oil production, as well as economic data that was a little bit softer over the period. We had a significant rise in bond yields through the quarter, which actually reversed by the end. It ended up being a very strong quarter for markets, with the ASX 200 up 8.5%, which was really dominated by resource stocks as well as healthcare, whilst telcos and banks were the weakest part of the market. The fund's delivered positive returns in the recent market environment, but it's been below the broader ASX 200 index. Over the last 12 months, the fund has delivered an income return of 7%, including franking credits, but its capital return has been only a similar amount to the income return. Despite this, the income stream has grown 2%. And when we compare the performance versus the broader market, what we really see is some of the structural differences of our equity income fund in terms of lower weights to high benchmark weight stocks, as well as not owning names that have very high growth but low income, such as CSL, having an impact on the returns of the fund compared to the broader market. Going forward, we expect the fund to deliver a 7.25% return for income over the next 12 months, and we expect that income stream to grow about 4% given the strong business conditions that Australian companies are seeing. So this is still a very attractive total return expectation for the fund. The fund remains quite diversified. We have low concentrations to any individual sector or to individual stocks, but we remain exposed to quality domestic companies that are benefiting from Australia's economic growth. For example, Woolworths is benefiting from stronger price inflation for food and liquor products, which is driving strong sales growth as well as margin expansion. And Insurance Australia Group that has very strong profitability in Australian domestic housing and car insurance, and we expect to see strong capital returns from a stock like IAG.